Question is, of course, what next? Is it just about access or is it about leverage? And today I have with me a very special panel which brings together India's industrial leadership to assess whether the deal strengthens India's bargaining power or locks the industry into a tougher global condition spot. Joining me today right now, Mr. Anant Goenka, President FICCI and Vice Chairman RPG Group, Mr. Subrakant Panda, Past President FICCI and MD, Indian Metals and Ferroalloys, and Mr. Vijay Sankar, Senior Vice President FICCI and Chairman at the Sanmar Group, joining in on the show right now. Gentlemen, great to have you all on the show. But Anand, let me first start off with you and let's talk about strategically how critical was the signing of this deal between India and US. The fact that we've come to an agreement now, more strategic than commercial, you would think, at least to begin with?
Absolutely. I think it brings about, takes away a level of uncertainty that was there in industry. There was always a little bit of a cloud in the last year saying that this is one thing that we still have to fix. And with this now going away, I'd say there's been a slew of positive news that has come in this month. We had the EU FTA, a very positive and strong budget, and capped with the US trade agreement certainly brings about a lot more positivity in the mood of the industry. On top of that, I would say the big benefit also comes in towards bringing about more stability and strengthening of the rupee, which has been depreciating. And that has other positive psychological effects, FDI interest into the country as well.
Anand, from an RPG perspective, you know, the large group perspective that you would share perhaps, can India afford to open markets without reciprocal certainty on tariffs and non-tariff barriers? I mean, you know, just strategically, how tough was the last 1 year to deal with this kind of an overhang?
I'd say overall exposure to the US from an export perspective has been limited. So to that extent, business has not got affected. I would also say there's a fair amount of complementarity between developed countries and developing countries. They have certain levels of technology. Of course, their cost of production, etc., is much higher. We have cost advantages as well. So to that extent, there is very limited impact that we found as a group. The areas that, of course, got affected were textile, apparel, gems, jewelry. So to that extent, as a group, there was a small section of tires for Fiat that we had to stop exporting, and that will start soon again. But beyond that, not a major impact.
But tell me, you know, just narrowing it down for the industry or India Inc. Anant as a whole, are Indian businesses aligned on this deal yet, or are sectoral interests, you know, still pulling negotiations in different directions?
It's too early to say. I don't think we have details of the fine print as to what really some of the statements on the tweets mean. For example, what does it mean that India is giving zero duty? Does it apply? I wouldn't take it fully at face value and would like to understand a little bit more. I think where the opportunity does arise is that it is very important and for Indian businesses to go global. And in our case, we were looking at the US market as a high important future growth market. And this deal gives us more certainty that, yes, we can pursue it with higher speed, which we had slowed down in the last year.
Okay, Anand, great to speak with you. I believe you got a rush, so I'm going to let you go on that note. Thanks as always for speaking with us.